Hello and welcome to AEF TV in association with Engerati. I'm joined now by Scott from Denham Capital, and welcome. Thank you for making the time to be here. It's early start, first first interview of day two, right. And we were talking a little bit off air, and one of the things that was a thread throughout of yesterday's interviews was this an idea that, well, not an idea, I think people were trying to make the point that investment is really coming into Africa, and it's not just investment that's coming into Africa, but actual real projects are being realized. And you guys are on the ground. Can you just put a little bit of context on that? What are you seeing, and more importantly, where do you see the gaps as well?
Very interesting, because I think it's generally true, but it's a bit uneven, and you can measure it differently by technology. For example, solar is definitely easier to get on the ground more quickly for a variety of reasons, which, by the way, is fantastic for Africa when you need power, because you can get it on the ground very quickly. Wind has been taking people a lot longer. There should be a major groundbreaking occurring soon in Kenya, but that took 8 years in the making. And thermal projects, there's some, not a lot. Hydro projects, there's some, not a lot. So yes, it's happening, and people are keenly interested on the M&A side, particularly local capital in Nigeria for some of the privatizations. But it's uneven in the sense of there's not, in our view, that much knowledgeable capital that can take multiple projects from inception to operation throughout. A lot of money wants to come in when you have all the wrappings of project finance around. Even more money wants to come in once you get to commercial operations. But the amount of money that can take a project from inception through really kind of winnows down, and that's a gap that we're trying to fill. Yeah,
and that's where Denham exist, right. And with the thing. So one of the other things you mentioned is like there's a gap between on the sort of gas-fired generation side of things, and you mentioned one of the others, hydro. Is that because the costs associated with that type of generation is exponentially different to something like solar? Is that the issue, or is the issue more around skills and capability side of things?
It's a variety of factors. One is solar. It's not commoditized, but it's more on a spectrum. It's more commoditized. That said, there's still people who act as developers who don't really know what they're doing yet, and that is a significant hindrance to the industry overall, because they tend to tie up those projects for some time. The reason why hydro, and I'll take them one by one, the reason why hydro is so difficult to get to a financial close is because of everything that has to be done before you can bring together project financing. It's not just hydrological studies, it's a lot of geotechnical work that has to be done. People go over budget on hydro all the time because you don't know quite often how much it costs to build until you've built it. Very hard to get total EPC wraps around all the civil technical work. There's ways to mitigate that risk significantly, but they cost money pre-financial close. You have to pace your dollars. That's one of the things that we really spend a lot of time on, because I like to call it lawyers, guns, and money. When you know that you have a real project, you'll spend a lot of money to get that done. That's when the lawyers, guns, and money comes in. But up to that point, we have to try to pace to make sure that we get on a critical path and we've spent our dollars as wisely as we can, with the all view towards putting our bigger dollars against the smaller risks, putting our smaller dollars against the bigger risks. The hydro side takes a long time. The gas side, on gas-fired, it's complicated, and it's to us one of the more interesting things. If I might just talk for a second about what we're doing in Ghana. Yeah. We just announced a couple weeks ago a partnership with GE and Finigestion in Ghana called Ghana 1000. It's actually over 1,100 megawatts, but it's gas-fired generation for Ghana. Fantastic country, a good rule of law, a great place to do work, but their credit rating poses some issues for fuel supply. What we're trying to do is create, with U.S. government support, some solutions around that so we can put together some financing to kind of crack the code on doing a large-scale new multinational project in Ghana. There's all this offshore oil with associated gas that is yet to be brought into Ghana. There's some that is, but it's not enough for them to fire the gas generation they need. So there's dollars, billions of dollars that need to be spent offshore to get that gas for them to fire generation. But in the meantime, what do? Do you just go to oil and diesel, heavy fuel oil? Our idea is to bring in LNG and put a floating storage recovery unit close to the shore.
So the idea being you're building a plant that has long-term sustainability. In the short term, it's liquefied natural gas that's being shipped in. Right. But when these offshore resources come on stream, you can get rid of
that. Take the ship, exactly, perfect.
Yeah.
Exactly, take that ship and just move it away. So on day one, when you're up and running, you've cut the costs from heavy fuel oil diesel as your marginal cost to LNG. That's pretty dramatic. And then when you bring the offshore gas on, a very significant cut, very much which is Israel is doing today with their offshore funds. But moreover, you have the commercial framework all set up and this built-in appetite for gas that will help incentivize people to spend money drilling offshore. So
that makes sense because almost the guys who are doing the exploration and going to get the gas out, they've got a local off-taker, rather than having to figure out, say, well, if we do find this gas, how are we going to get it to the market? Yeah.
Right, and it gives you a better framework about what the economics are that you're dealing with, because one of the critical issues always when you get the multinationals to drill large offshore is how much has to stay home base, what are we going to get paid for it, and how much do we take offshore, and are we building a big LNG facility there, what are we doing with this oil, this associated gas, whatever the ramifications are. So it gives you enough of a framework around to negotiate that deal, to have it all set up, so off you go.
So with what you do, it strikes me, and I'm putting it in simplistic terms, you're the start of the project supply chain, if I can call it that. Mm-hmm. Yeah. So you guys are like first on the ground. You're help put management teams together. Mm-hmm. A question that I'd like to ask, because that is the nature of your business, and you guys must get exposed to a whole lot of projects that, I mean, not all of them make it, right. But you would be the first port of call to say, look, here is an idea for a project, you can have some fun. Based on that, in your experience, are you seeing an uptake of those types of conversations or those types of people knocking on your door that can reaffirm some of what other interviewees have been saying, that actually the appetite for investment in Africa is growing and capability is growing, and it's so complex, skill sets are growing, the people who can do that. Are you seeing that as well, or is it pretty much the same as last year?
No, I think I am seeing it. Well, let's take it again. By solar, it's taken Africa by storm, as well it should, because Africa needs power dramatically. Solar can get there quickly. We're developing solar. We've got solar plants running in South Africa, and we're developing through other portfolio companies throughout the continent. Wind takes a little bit longer because you really have to do good wind studies to know what you have. It's a lesson that was learned in Europe, in the United States, and Brazil, and now it's getting...
there's companies making a lot of money about predicting wind into the future, 10 years' time. Heaven knows how they do it.
It's a science, but and it's got a little bit of art in it, and the idea is to reduce the art and get to the science as much as possible. The one thing that you can do is go well beyond the minimum. I have a saying, which is just because the lenders let you do it doesn't mean you should do it. So just because you can close project financing with a certain amount of wind studies doesn't mean you should do more before you actually put your equity in and make a project work. So wind takes a little bit longer. But there's been a lot of activity towards that, and there is a lot of money chasing that. Some of it's competent, some of it isn't. On the thermal side and the hydro side, we see more of these opportunities, but they're longer in gestation. They take a while to get done. We think that the appetite, once you get to financial close, and you've done all the bells and whistles that are required for project financing, it's phenomenal. And then we think once you get to commercial operation, the amount of capital that wants that is phenomenal. But to us, it's a blocking and tackling business. There's a lot of people who think about Africa as, you know what Africa needs? Africa needs its own public IPP. So let's go cobble together assets, and I'll call it 17, 18% returns, but really they're 14, 15% returns. I'll throw them together as quickly as possible, and I won't really, put the best sort of fundamentals to them, and then I'll get them out to the public markets as soon as possible. And that's their plan. And so they're trying to get, as much pipeline as they can possibly get. They're trying to wheel and deal as much as they can, and it's all premised upon, kind of honestly dumb money on the back end on an IPO, and I don't think that's the right way to do it. We think that this is a blocking, tackling business. I've been doing power development for 20 plus years. The teams that we have on the ground have been doing it for 20 plus years. You have to make projects one by one that are viable in and of themselves, that people will want to invest in at notice to proceed, at COD, and they will have scarcity value. And I think Africa will have that for years to come, honestly, just because so many people in the IPP industry is still so fledgling.
And that's one of the things where things go wrong as well. When you, you mentioned it earlier, where people tie up projects because they actually haven't got the capability of delivering it, and right. they come back to market. But one of the other questions that I was going to ask you is, a lot of people are talking about renewables. They're talking about wind, solar, because, well, solar in particular, easy to get in and everything. But there's a practicality. What about base load? Where are the base load projects?
Right.
Hydro could be a base load, but it's not. So, are you seeing? And we can't get away from fossil fuels when we talk about baseload. So are you seeing a sort of a lot more appetite for what I would call high efficient coal plants as well as gas? Because there's an abundance of coal, especially in South Africa as well.
Yes, the issue for coal is getting multilateral support for financing. There's some exceptions. Some countries where we'll do it, and we try to take a targeted approach to coal that fits that sort of criteria. So for example, we just completed a 600 megawatt coal-fired station in the Philippines. As first of its kind to take Chinese contractors overseas in a non-government to government deal. And it provided power last year to Luzon Island when it came on during the summer months that otherwise wouldn't have been available. So they either would have not had power, or they clearly would have been running very highly polluting diesel with a similar carbon footprint, but much more negative particulate matter kind of emissions than coal. So clear and present danger to health today from that. So, and it was lower cost. So in those kind of situations, we think coal can make sense. We don't think it's the fix for everybody. I think gas-fired generation throughout Africa will, 10 years from now, which maybe not in our investment cycle today, but 10 years from now, when you get all these offshore finds onshore, will be phenomenal. That will be.
And gas has got that DNA. It's a highly efficient generation. Coal is typically 38% efficiency, whereas you can push gas close to the 80s, 90s percentile as well.
You get it. You can get gas very, very high, and it is efficient. Its carbon footprint is much lower, and you can ramp it up and down much more easily around renewables. So the blend of gas and wind and solar is a really good mix. Not to disparage coal, because there's going to be still countries in Africa that don't have access to gas now, and having coal-fired generation, you can't measure it in a vacuum, because you have to say, if I can't have access to gas and I can't get solar, wind 24/7, should I be firing diesel? Should I not have power? You can't have a middle class without power. I mean, it's impossible. So, so we think in the right set of circumstances, coal-fired generation certainly makes sense.
And just because we're kind of coming to the end of our time here, are there any sort of areas within Africa which you see are hotspots as well? Because I mean, a lot of people are talking about Nigeria, but I was interviewing a gentleman yesterday who said, you know what, we and that is their business, and there's some more reasons behind his answer. Aren't quite sure that we are ready to invest in Nigeria yet, because we want to see a first mover.
Right.
So my question is, you know, where are the hotspots, and what are some of the issues between making those hotspots, taking them away from talking points to actually, you know, people investing in them?
Okay, so I think there's a few that highlight. I mean, first off, you can't talk about a hotspot in Africa without mentioning the renewable IPP program in South Africa. I mean, people can poke at that if they want to, but it's been highly professional. From everything we can see, it's been totally devoid of corruption. It's been as transparent as it can be, and it's very successfully delivering power at reduced pricing. So how can you really argue with that? So that's, you know, now they're going to try to take that to thermal, and I think they'll do well. I think that will actually happen. So I think that's one hot spot. Let me go to another good one, Kenya. KenGen and Kenya overall has really run a very professional process to bring low-cost power to people. Very thoughtful how they've done that, and very quietly they've been able to attract multinational investors who want to come in. They ran a qual procedure recently, and I think there was well over 30 multinational companies who showed up to qualify just to bid for a project. So they've done a really good job, and I think they're really to be commended. Ghana is a hot spot for us because we think that it's the right time. We have to crack the code on country credit and bringing in long-term supply of gas, and I think we'll do that with the help of the US government and the Power Africa initiative and all the great agencies. Nigeria is interesting. I feel a bit like a moth drawn to the flame. I mean, you have an oil and gas industry there where a lot of people make money by virtue of the fact that it doesn't work, and that has the backs of those people have to be broken at some point. Yeah, and I think that people can argue if that's, last night I was dinner, someone said, well, that's going to take a generation to fix, and other people think, well, all you have to do is get a couple of these projects going and you change. You've had the privatization efforts that have happened where local money has chased deals, but when we looked at them, they've mispriced them by and large.
Is that a lack of experience?
Yes.
Yeah.
Yeah, because you know, it's just, there's not a big IPP industry here. Very bright people, they'll figure it out without a doubt, but power, particularly thermal power, it's not cookie cutter. It's not so simple. There's a lot of complexities to it, and you don't have to look too far to find large multinational companies who've lost lots of money on projects here and there because even they didn't figure it out up front. You know, it's not. If it were easy, anybody could do it. So I think that's part of it. Cracking the code there in Nigeria of getting the World Bank partial risk guarantee for the Azure project, getting that unfolded so that you can unleash new international money to come in and put those projects together, that will be the sea change. As that happens in Nigeria, you'll see that market take off. To the extent that it continues to delay, I think you'll see a lot of people standing by the sidelines.
And you almost need that first mover proof, don't you, with that. Just before we wrap up, I mean, you mentioned South Africa, you mentioned Kenya, and one of the DNAs between those two countries, it seems to be, is an exceptional skill set in terms of the learning about, you know, how to go out to market, how to tender for these projects, how to vet those tenders and things like that. Is that another thing that needs to be sort of transferred to the rest of the continent in terms of capability, or?
Well, over time it does. But I got into an open debate last year with someone who said, you have to get all that done first before you win power. And I mentioned a woman who, I won't mention her name, but someone that has got deep involvement throughout Africa, very revered, grew up in Ethiopia, worked in the United States for a long period of time. Her mother was back in Ethiopia about 10 years ago, that's where she lives, went in for day surgery. What in the Western world would be fine, and Ethiopia would be fine, except electricity went off, and she passed away. So, do you want to debate me about we should wait 3 years to get all of our procurement processes correct, or do you want to get some decent consultants, know that you're getting a decent market deal overall, and just get it done for your people? The first deals for countries are not going to be their best deals in terms of ratcheting down all the terms. They're going to be the best deals in terms of eliciting much more investment in the country, making it be a country that people will want to invest in long term.
And also those first deals are part of a learning curve, aren't they? You've got to start somewhere, and,
right.
and that's when you start building a local skills base. Scott, it's been fascinating talking to you. Thank you very much for making the time. We've come to the end of our time now, but I enjoyed the conversation, and thank you again. And thank you as well for watching. There's been another interview at AEF TV in association with Engerati. We've got many more today. I don't think we're going to make our record. We did 32 last year, Scott, so I think we're going to be shy of that, but we're going to give it a good go. So thanks again for being here.
It's a real pleasure.
Thank you.
Yeah.
Okay.
Cheers.